Today, payroll jobs are down. Hi again, it's Martin North from Digital Finance Analytics, one of those posts covering finance and problem news with a distinctively Australian flavour. Well, the ABS says that payroll jobs fell 0.8% in the month to the 16th of July. That's according to their latest figures released today. The ABS said that while some of the fall in payroll jobs over late June and into early July reflects the seasonal influence of school holidays on the labour market, together with the end of financial year seasonality in payroll reporting, it also covers a period with increasing employee absence from COVID and other illnesses. During periods of high employee absences, we've seen that payroll jobs data can show slower growth and larger short-term changes than labour force statistics on employment, given employees without paid leave entitlements may be away from work for a short period without losing their job. The interpretation of changes in payroll jobs around the end of the financial year can be particularly challenging until business reporting is more complete. As employers finalise their employees' earning information and the financial year is reset in payrolls, estimates of payroll jobs can show a higher level of variability and subsequent revisions, particularly during June and July. The employee absences up to mid-July 2022 followed a sequence of labour market disruptions outside of seasonality, as seen in previous years. This period in 2021 coincided with the emergence of the COVID Delta variant, while in 2020 the labour market had just started to recover from the initial pandemic outbreak. While employee absences have impacted on week-on-week changes in payroll jobs in recent months, underlying growth has generally continued through the year, they said. By mid-July 2022, payroll jobs were 4.5% above mid-July 2021 and 9.9% above mid-July 2020. This also reflects what we've seen in terms of increases in payroll jobs since the start of the pandemic in March 2020, with around 8% more payroll jobs in mid-July 2022, compared with around 4% more in mid-July 2021. Payroll jobs fell in all states and territories in the month of mid-July, with the highest falls in the Northern Territory down 1.2% and Victoria down 1.1%. Most states and territories saw the majority of the fall in the second fortnight of the month. The timing of school holidays differs between states and territories, reflected in different seasonality in the weekly payroll jobs data. For example, there was a slight dip in payroll jobs in the last fortnight of June in Victoria, Queensland and Northern Territory. Those jurisdictions commenced their winter term break in the last week of June 2022, at least a week earlier than the other parts of the country. Over the month to mid-July, payroll jobs fell for both men, down 1.1%, and women, down 0.9%. And while the recent changes in payroll jobs were relatively similar for men and women over the past year, there's been a much larger increase in payroll jobs worked by women, that's 3.7% compared to men at 0.3%. By industry, there were significant movements by different industries, with public administration and safety, other services, and construction showing the largest fall in payroll jobs. I think it's quite significant that the construction sector is seeing jobs reducing, not least because, of course, you would expect the boom to continue at the moment. So it's worth considering whether, in fact, this fall in the construction jobs is to do with the recent failure of a number of construction entities and the fact that the momentum in the industry is easing back. On the other hand, mining is doing quite well, but of course mining only employs a relatively small proportion of the population, more than 1 million people working across construction. And there was also a fall in the rental, hiring and real estate services. That's one to watch ahead too, I think. Now, whether this is a material change, of course, we'll wait and see. But it is interesting that we are seeing some easing back. And as interest rates rise and firms get into more difficulty and households struggle, you wonder what's going to happen ahead. Jobs is definitely something to watch, because the expectation from the RBA is that ultimately unemployment is going to start to rise. The question is, when will we start to see those trends emerging in the underlying data? I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.